Hi, welcome to the Stock Market channel. Today I'm going to talk about 7 stocks that are in a long-term uptrend with long-term growth potential. And if you stick to the end of this video, I will show you one stock or investment vehicle that has gone up over time for the past 90 years. It's one of the most solid investments in history. Now, one of the most important things when it comes to investing and trading is you need to be in the right side of the trend. And the trend is indeed your friend. If you check some of the biggest winners in the stock market, you will notice that they are all in an uptrend. So what is an uptrend? More on that later. Before that, let me just introduce myself. My name is Stephen Loh, and I help people go from not knowing how to invest and trade in winning stocks to being able to buy big winners in the stock market through trend analysis, so that you can build wealth for your retirement and also pass it down to your family. So if you're interested in building wealth for the long term through longer term trading and investing, then this video is for you, as the concepts that you learn in this video can also be applied to many other winning stocks out there. At this moment, I would just like to ask you to like this video and press the subscribe button so that you can watch other videos about building long-term wealth in the financial markets when they come out. So back to the question, what is an uptrend? So this is what an uptrend looks like. The stock goes up, then declines, up, declines, go up, declines, and then go up. So what it looks like is it's going 45 degrees up trend, going from the lower left to the upper right. So do remember this pattern where the stock goes from lower left to upper right, because what you will realize when you look at the 7 stocks that I'm going to show you is that all of them looks like this when you look at their chart. Alright, let's take a look at the first stock. The first stock on my list of 7 stocks in long-term uptrend with long-term growth is Apple. There's no surprise about that. Now, if you're a beginner in the stock market, you will realize that, wow, this is look like a mess of a spaghetti where the stock goes down, up, and what are all these things? This is called a candlestick chart, and the lines on the chart are moving averages. Now, where do you see the stock in an uptrend? Because when you look at it, it looks like it's going just up and down, up and down. Now, the trick here is to go to here. This is the ticker symbol Apple with MA5, 1HD, 1 month, W. So what you want to do as a long-term investor or trader who follows the trend is to click on the W, go to the weekly chart, and then you can see, alright, that the stock actually is moving from the lower left to the upper right. Now if I draw for you to see what the uptrend looks like, something like this, isn't it? Remember the drawing? Yep, it's not perfect what Apple is doing. There are ups and downs, but when you scroll back, you can see that it's just moving up, down, 45 degrees up. And one of the ways for you to know whether it's a strong long-term uptrend, good stock to invest in, is to look at the weekly 200 MA. This is the yellow name, the yellow line. The yellow line here is the 200 MA, and it's a very important line for us. When you see a stock trading above its rising 200 MA, that means it is a long-term uptrend. The stock is healthy and you can invest in it. Now you can see let's go back to until 2005, where the Apple stock, the weekly 200 MA has been rising, and you can see that the stock has been staying above the rising 200 MA for very long periods of time, except here. Sure, there are rises and sell-off and crashes, but as long as the 200 MA is rising, the stock has also been rising and rising and rising and rising. Yeah, there are ups and downs, but eventually you see Apple is just doing like this, and it is still rising, and now it is still above the 200 MA, and it's going to make a new all-time high soon when it breaks out of this resistance over here. Now, one thing you need to know is there are 2 ways for you to make money in stocks. The first way is to buy a breakout out of a consolidation. Let's say this is consolidation and the stock breaks out higher. So you buy the breakout and ride it higher. Now, a second way is to buy the dips in a long-term uptrend. So this is a long-term uptrend, stock making higher highs and higher lows. And what you do is when the stock goes up and drops here to a support area, you buy it. It goes up, it drops to a significant area of value, you buy it. So you buy the dips in the long term. This is the second way. The first way is to buy a breakout. Second way is to buy the dips. And here you can see Apple has many breakouts and dips. You can see that stock has dropped to here a significant area of value, and you can actually buy the stock here. And for example, here the stock breaks out of a triangle pattern. Right, breakouts can also occur not only on consolidations but patterns. You buy the breakout, and here's a dip here. You can buy the dip to a significant area of support. And at this moment, what Apple is doing is that it is trying to break out of this resistance area. So this whole area is like this consolidation over here. So we can actually draw a consolidation pattern for you to see, and if it breaks out of this consolidation, it's going to move higher. Alright, let's move on to the second chart. Second chart is a chart of Nvidia. Alright, something is wrong with the chart of Nvidia investing. Let me go to trading view. Alright, this is chart of Nvidia, and this is the daily chart. And even in the daily chart, you can see that the stock is moving from lower left to upper right, making higher highs and higher lows, and it's above the rising daily 200 MA. This tells us that this is an investable stock. If you go to the weekly chart, it is also the 200 MA is rising, but this is a very strong stock. That's why we use the daily chart to look at the 200 MA, and it's rising, and this tells us that long term is bullish, it's investable. Now, this stock recently gave a cup with handle buy. Right, this is a cup with handle buy. You buy the breakout here or slightly here and ride it higher. So at this moment, this stock is a bit overbought from the buy point here. You might want to wait for another consolidation or another dip before you buy it. But it's a very investable stock, and you should put it in your stock watch list. Now, the third stock I want to show you is a stock chart of Microsoft. This is the daily chart, and you can see that it's moving from lower left to upper right and it's making higher highs and higher lows, as you can see, and the 200 MA, the daily 200 MA is rising, which tells us this is a very investable stock. And the weekly chart, you can see the 200 MA is rising, and you can see from here it moved from lower left to upper right. It has been staying above the rising weekly 200 MA, and is a very investable stock. And here we have a dip to significant area of value where it has formed a double bottom pattern, which is buyable. Here we have a breakout, and right now the stock is actually just trading sideways without forming any pattern yet. Here we have the breakout, but what I would like to see is for it to form a significant area of value where it forms a buyable pattern or a breakout. But at this moment, I don't see any pattern right now. But put it on your watch list. Maybe another sideways consolidation might form. Maybe another double bottom might form. You can have faith that it's probably gonna rise because it's still trading above the rising 200 MA. Now let's take a look at the next stock, Goldman Sachs. Well, you can see that the stock is still trading above the rising 200 MA, which tells us that it's long-term healthy at the moment. And if you take a look at the weekly chart, although it is zigzagging up and down below the weekly 200 MA, from about here, the 200 MA has been rising, and this gave investors hint that the stock is going to be good in the long term. Now, what is interesting about Goldman Sachs is that it has broken out above a long-term resistance here, and this is a very strong area of support. So a dip to this area is very buyable, and remember, two ways we can buy stocks. Either you buy a breakout, like here there was a breakout above this consolidation, or the second way is to buy the dips. So if it drops to here, it is a very buyable area, but we might want to look and see if there is a consolidation coming here. Let me just show you the consolidation. If it trades sideways like this and it breaks out of this consolidation, it will be something like this breakout where it's very buyable. Alright, let's move on to our next stock. It's SKX or Skechers. I believe it's a shoe company, because I do wear Skechers and they're very comfortable and they last quite a long time. So what are the first thing you need to look at when you see the stock chart? Is it moving from lower left to upper right? Yes. Making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and higher highs. It's just going up higher despite the sell-off. And many of these sell-off are actually opportunities for you to buy the stock. Now, like here we have kind of like double bottom. Here it breaks above a downtrend line, but look at the rising 200 MA. It tells us that it's long-term bullish, long-term uptrend, and you see, if you switch to the weekly chart, you can see that it's moving from lower left to upper right as well. Since here, the rising 200 MA points to long-term bullishness, and we can actually see a double bottom here in the weekly chart as well. So at this moment, I don't think there's any buy point for us. You need to wait and be patient, right? Maybe there will be a consolidation and a breakout, or maybe you can wait for it to drop to area of value. This is a support area. If it corrects down to here, you might want to buy the stock, but definitely a very investable stock with long-term growth, because it's moving from lower left to upper right, and the products are not bad. The shoes are actually quite good, actually. So let's take a look at the next long-term investable stock. It's called Walmart. I think many of you will be familiar with the stock. Now, first question, is it moving from lower left to upper right in the daily chart? Yes, it is. You can see that the 200 MA is also rising. Go to the weekly chart. Wow, is it moving from lower left to upper right? Yes, lower left, upper right, making higher highs and higher lows, and the 200 MA in the weekly chart is rising. What does this tell us? Daily chart and weekly chart tells us that this is a very investable stock with long-term potential. And recently it just broke out of this consolidation. Remember, one of the ways to buy a stock is when it breaks out of consolidation or buyable dip. At this moment, is it a buy area? Maybe not, because it's very far from the buy area. You might want to wait for another consolidation or a correction to this significant area of value. But it does has a long-term potential. When you identify stocks like this in long-term uptrend, it doesn't mean you need to buy straight away. You need to put it on your watch list and be like a cheetah. Look at the stock and only pounce on it when there's a very nice setup happen. So let me just show you the last stock, the 7th stock. Interactive Brokers is a very famous brokerage here, and it offers discount trades. You can see that the stock has been moving up from lower left to upper right. Yeah, there is sell-off and so on, but the trend is up, and you can see the 200 MA in the daily chart is moving up, which tells us that you must be bullish buyers in the stock in the long run. And in the weekly chart, you can definitely see that over time it has moved from lower left to upper right. So this is a very investable stock for the long term. And what you can do is wait for dips. Like here, there's a correction down to this area, and this is bottoming tail that tells us that it rejects to go lower, and it's actually a very viable area, and it's just been chugging higher. And sometimes you can buy it when it drops a significant area like support area here and move up. So at this moment it's correcting. Maybe when it corrects to the 50 MA, you might want to take a look at it and see whether it's viable like here. The best is to wait for perfect consolidation breakout or buy the dips at support area, but definitely put it on your watch list. Now for the last, I promised you one stock or investment that's gone up for the past 90 years. Let me just show you. Alright, let me just show you a macro trends page, and this is a 90-year historical chart. And you scroll down from about 1928, 1930s up to here. You can, what you see it is moving from lower left to upper right, and the investment vehicle is the S&P 500. I think many of you would have known that. For those who do not know, the stock market represented by the S&P 500 has gone up over the years. Sure, there are dips and crashes here and there, but if you look at the long-term trend, it's been moving higher and higher, making higher highs and higher lows. So with that knowledge, is there any way we can buy the entire market? The answer is yes. You can go and take a look at SPY, which is the exchange traded fund for the entire stock market. And over the years, you look at the weekly chart. First of all, what you see is moving from lower left to upper right, and you can see the rising 200 MA, the weekly chart. You can buy the dips or the breakouts, and since you know that the S&P 500 goes up over time, you can buy anytime. Like every time it crashes, maybe you buy a bit more. You could invest 5% of your income into the S&P 500 by buying the SPY, or another vehicle is VOO, Vanguard S&P 500 ETF, whether it's SPY or VOO, it doesn't matter. And how do you buy it? If it's very expensive for you, you can use discount brokerages like Interactive Brokers, where the commission is low. You can also buy fractional shares. I think Interactive Brokers allows that. You can use a Robinhood. Right, this is Robinhood, where you can buy fractional shares. They're offering bonus right now if you sign up. Fractional shares means that you can buy it. Let's say it's very expensive, it's 490. You can actually buy 10% of it, or 50%, like $100 or $200. That's what Robinhood allows you, and Webull also allows you to do that. And when you sign up, you get free fractional shares if you deposit certain amount. So I do hope that this is helpful to you, these 7 stocks in long-term uptrend. So if you enjoyed this video, learned something new, please like the video and subscribe to my channel, and I'll see you in the next one.